know.
We getting fancy. We getting fancy, man.
Playing with all the tools, man. Playing with all the tools.
Hey, we know we're gonna figure it out. We're gonna figure it out at some point.
How'd it go for you today?
Hey, man. These are the days that I live for. You know, this is the home run day. I like to say, you keep base hitting. Eventually, that home run's gonna come to you. And today was one of those home run days for me.
Nice, nice.
Like I told you when we was talking earlier, I took 55 points out of the ES on that drop. So
can't beat that.
Yeah, not too bad. I'm not. Hey,
yeah. Same, man. I had a great day. You know, all my levels were great. You know, all those levels we mentioned yesterday for oil, you could have traded off of every single one of them, made money on them. So no complaints whatsoever. So I definitely had a great day myself. So excited to get back into it here today. I think we're going to do something a little bit different with our format. As far as doing some stuff for some beginners. So I guess we can kick that off. We'll start it there. Give me 1 second. I'll go ahead and bring up my screen.
Right. So as you're doing that, you know, of course, we want to make sure that we say that, hey, trade at your own risk. This is a game for big play. No, I'm just playing. I'm messing around. But no, in all seriousness, no. Trading is indicative to, future trading is not indicative to past performance of the market. You know, trade at your own risk. We are here for informational purposes. We are not responsible for your trading, just so you know. Trade at your own risk. Risk reward. Great. All right.
Be safe with it.
Be safe, man. Be safe. Yep.
All right, so let's get into some beginner basics type stuff. So I was thinking last night about some various topics that we could do on this. And I was like, well, what's the very first thing that you need to decide as a trader? And so in my mind, I'm like, you know what? You need to determine what your trading time frame is. I know yesterday we talked about that we were both day traders. And some people who are watching this probably had no clue what a day trader even is. So I think today we're going to go over that, put some definitions behind some of this stuff, what a day trader is, what a swing trader is, what a positional trader is. We'll kind of go from there. And then we'll kind of give some tips to some folks to maybe determine what their best time frame is and some things that they can think about. So let's go ahead. We'll get started. So the first thing we'll touch on is the types of time frames that we have. So we have our day trading. That's what Adrian and I both do. This is when you're in and out of a position in the same day. You know, you're pros on it. You have no overnight news risk, which is huge. You can sleep at night. It's a great feeling. To have to know that your money is safe and sound and it's in your account and it's sitting there ready for you the next day. No worries at all there. Now the con is, you know, you got to be available for the market. You got to be there when the action's happening. And I'll get into a little bit more depth to that here in a little bit. The second thing is a swing trader. So a swing trader would be somebody who's holding a position for, let's say, like 1 day to 1 month. And this could vary. Some people might have different definitions, but just for our purposes, that's what we'll use. You know, you're pro on that. You know, you have a lot more scheduling flexibility. The con, you know, you do have the overnight news risk. Those things that can happen, you know, cause those instant drops, especially if you're trading like an individual stock. Some kind of weird news can hit all the time on those things. So it's a little bit risky there, but you know, sometimes the schedule is what the schedule is, and you got to. That's the type of trading that you have to do. So, and then finally, you have your positional trading. Those are the things that you're planning to hold over a month. You know, it's easy to join trends, stick with them. You're not really paying attention to the market too much. You're just kind of letting the market work for you in those situations. You know, but you do have massive news risk with that. And especially you have the vulnerability to those black swan events that, you know, they seem to happen. You know, at least once, twice a year, you're going to see something weird that nobody really expects that hits the market. And that's where the positional traders get themselves in trouble. You know, when those things hit, the things that come out of left field that nobody ever saw coming, essentially. So a couple things that we can do to determine, you know, what type of trading that we want to do. You know, you want to think about your personality type. You know, if you're impatient, you thrive on action. You know, the shorter time frames like day trading probably are better for you. That's me. You know, you're in and out fast. You're scalping on 1 minute, 5 minute charts. It's high energy. It's super rewarding. You get that instant feedback, you get instant like hit of adrenaline when your trades hit. But on the flip side, you can get a little bit over aggressive too with day trading. Sometimes that can come up and catch you. If you're patient, cool headed, sometimes the swing trading, position trading can be your lane. If you're fine with letting a trade ride for days or weeks, just watching the trend unfold for you without freaking out on over every little dip, because you're going to see your position go up and then it's going to go down. The market never goes in a straight line. So you have to have that discipline to be able to stick in your position and stick to your plan. If you have that type of personality, swing trading could be for you. Um, your decision making style, that matters as well. Are you decisive? Are you fast to act? If you're quick on the trigger, short term trading is probably for you. Um, if you need a little bit more time to analyze your positions and make a more analytical decision, then you're looking at more of the swing trading and the positional trading. The other thing to consider is your risk tolerance. If you're a thrill seeker, you don't mind that roller coaster ride, day trading volatility, that could energize you. But if you're anxious, you hate surprises, those swing trades, they could wreck your nerves a little bit. Longer time frames, they feel safer. Your stop is usually wider, so it's not approaching it as closely. And if it does, it's inching towards it, so you can like mentally prepare yourself for that stop to be hit. Where sometimes if you're day trading, you can't really do that. Um, so here's a quick gut check. So picture yourself in a trade and price 2% in your favor, and then it drops another 1% the next hour. So cut that gain in half for you. So how do you feel right now? Are you feeling pumped to react to it? Do you want to react right away and get out of it? Or do you want to wait around for it a little bit? Those are some things that you need to think about and some things that you can consider as far as a personality type goes for your trading decision. Next thing, and this is a huge one, you got to think about your schedule. You got the time to be a day trader. It's a 9 to 5 job essentially. So if you have another 9 to 5 job, maybe day trading is not for you. Or if you got family obligations that are going on all day, if you don't have that time to sit in front of the market, watch your position, you might be better off being a swing trader. But if your schedule's flexible, you work nights, freelance, have chunks of time that are off, honestly, day trading can work for you. You can make it work for you then in that case. So, swing trading, it's a better fit if your time's chopped up. You're looking at daily, hour, 4-hour candles. You don't have to sit there. You don't have to babysit everything. You kind of make your plan, you get in, and you see what happens. Position trading is really the same way. You're setting that plan early. You're giving yourself a nice wide stop. You're giving yourself some set targets for it. That's the type of stuff that you need to be thinking about. So look at your work week. Think about when you can realistically sit down in front of the market. If it's just for 30 minutes a day, or a couple hours a day, maybe day trading is not for you if you only have a few minutes, or if you only have like a weekend to look at the market. That's probably a person who should be a positional trader and not even a swing trader, because you do need to dedicate a little bit of time to the swing trading. I would probably check, at least daily on your swing trades. The positional stuff you could look at every weekend, you know what I mean, and get a good feel that way. And sometimes if you're over checking that stuff, that'll lead you to bad decisions as well. So just some things to be aware of there. Some other things to consider, what's your goals with trading? Are you looking for that fast, quick cash? If you are, day trading is your spot. That's where you're going to get your in and out quick hitters. You're going to be making money every day, putting it in the bank. Cashing those gains and watching that account build pretty quickly in most cases, if you're doing it right. If you're looking for steady long-term growth, say you have a lot of capital, and we'll kind of touch on this in a little bit, but if you have a big amount of capital and you're just looking for that to grow steadily, then you're looking at that swing trading or that positional trading goal once again. Again, capital is a big deal. If you have the money there, sometimes the positional stuff's better for you. It doesn't take as much risk per se. So, and once again, your risk tolerance. We touched on that on the last slide, but again, it's a big deal. Risk ties into it. Your short-term goals, often mean that you're betting big in the tight windows. So you're exposed to those wild swings. If you miss a trade and when you're day trading, it stings. It hurts more. Your long-term goals. If you let it dip, say 3-5%, it doesn't kill your plan usually. You know what I mean? You can let it kind of wiggle around a little bit for you. If you're planning for a 30%, gain on the trade, 3 to 5% seems like nothing, and you're still keeping that good solid risk reward then at that point. So finally, how can you test this stuff? Two things that you can really do to make it easy. You can paper trade. And this is what I did to start out. Honestly, I spent an entire year paper trading before I actually made one single live trade. So I thoroughly tested. I think I talked about that a little bit yesterday, how I'm kind of a dork with all my testing and all that stuff. And I thoroughly tested all my plans out, before I started the trade. And even once it started, then it was a whole different feel once you get that live money going. I'm sure you can attest to that, Adrian. The emotions get involved, and I'm like, man, I've been planning for an entire year, and now I'm like screwing up my whole plan and da 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 da. So paper trading, great spot, to kind of work out the plan and work out, what you want to do in the market. But you're not going to feel those emotions. So that's when the small account size can come into play. So if you start out just with a little bit of money, something that's not going to hurt you too bad to lose. Trade with that at first. Get your feet wet. Learn how you want your strategy to work. Learn how it makes you feel throughout the day, and then you also got to learn how you're going to deal with those emotions when they come up. I still get nervous a lot of times. I even experienced it today in a great market. Those hits you a little bit. You feel that little tingle in your stomach. And you don't really get that with paper trading. So small account size is definitely a great way, to test this stuff out for yourself. As always, Adrian and I here, we're here for any kind of questions you guys have on this stuff. This will be the first in the series of various topics that we do on, beginner type trading things, just to get everybody's feet wet. So, Adrian, you got any questions about any of that? Did I cover it thoroughly? Do you have anything to add at all?
No, I think you definitely covered it well. As we kind of wrap that up, especially like you said, paper trading and starting a small account, it is vital for you to definitely do one of the two. Don't just jump right in with a lot of money, because one, like you said, and I'll take it a little bit further. When you're paper trading, you have no emotional ties to that account, that money, right? So whether you lose, whether you win, it's just like, okay. So the emotions in you are not triggered, right? Now, When you start trading live, you will start to realize that trading will bring out emotions in you that you never had. I think
that you don't even know existed, man.
You don't even know they exist. Let me tell you, trading can become one of the most therapeutic, self-healing journeys that you probably didn't know you needed. I know I went through it. It showed me a lot about myself and who I was, even as a man. Because one thing with trading, it's great to have a community like with us, right? But also, like, this is boxing. You're in the ring by yourself fighting the guy. So you slip up, that's on you, right? You don't slip the jab, you miss, that's on you. You're gonna be exposed all by yourself. This isn't football, this isn't basketball where you can kind of hide out and play the blame game. Like, no, this is boxing. This is tennis. You're out there by yourself. And to see how horrible that you could possibly do, it's humbling.
Very.
It's extremely humbling. Yep. So yeah, but I think we'll talk about that, of course, as we continue these series of discussions.
Absolutely. And one other thing to keep in mind on the account sizes and the amount of capital that you have, there's also something called the pattern day trading rule that people need to keep in mind. If you want to day trade those individual stocks, you have to have at least $25,000 in your account to be able to do it successfully. There's a rule. You're only allowed to day trade 3 times per week, which don't ask me why they had this rule. It's kind of stupid if you ask me, but It is an SEC rule. You got to love some of our government rules, and this is one of them. It's interesting. But if you have under $25,000, you're limited to 3-day trades per week, which isn't much. I mean, you could do that easily in a day. And the big advantage of being a day trader is your flexibility to get in and out of positions quickly. So that takes that away from you essentially if you don't have that 25,000 in there. So something to keep in mind. Futures is a whole different story, and I think that's probably how and why Adrian and I got involved with futures to begin with. I mean, there's a much lower barrier of entry for it. And we'll touch on that in future episodes. We'll talk about the differences between, the various products, what futures are, what stocks are, maybe get into some bond type stuff. We'll see. We'll see how deep we go into that. But just something to keep in mind, once again, for the amount of capital that you begin with, there is a stipulation there that's government regulated that you need to be aware of.
So. Yeah. And I think you started options too. So
I've traded options. I've gone all over the place, man. I've done it all in the last 8 years. So we can definitely explain some of that too as the time goes. So so with that being said, that'll cut out kind of our beginner portion of this, and we'll go ahead and we'll get started on some market stuff. Charts. So super interesting day today, like Adrian kind of alluded to a little bit earlier.
I missed flipping ticks. Flipping ticks said they caught 55 ticks today. So.
Oh, nice. Well done. All right, so here's our daily chart from yesterday. If you have a look at it, we can see we did penetrate one of our key levels here on the bottom. But we are actually forming a really, really interesting pattern, and it's one of my favorite of all. We have a failed breakdown that's starting to happen here. So if you see this low, this is where you had a big gap down, sold off, and right here is where the buyers stepped in, and they started to drive it up, and that's what drove us all the way up to this all-time high at 61.6750. So buyers were in control that whole time. So now we flushed all the way back down. We took them out, but we instantly recovered it. And I mean instantly. It wasn't long at all. It was a matter of half hour, 45 minutes, and we were starting to already drive back into there. And that's usually a good sign for something called a failed breakdown. And we'll go into specific chart patterns at some point as well. But there is something super interesting that's setting up. If you're a longer term S&P 500 trader, be aware. This is a very good risk reward entry point right here. If you entered right now at this moment, you could enter here. I would put the stop right below that tail there. And you got tons of upside, even before you start breaking the new all-time highs. You got a lot of room to run. So it's going to be really easy to get a good risk reward type trade here. Very, very, very interesting setup that's happening there. And I'm probably personally going to start getting, long on ES just to give it a shot. If it works, it works. If it doesn't, we'll look for the next one. So, but the risk reward is there, and that's one of the keys of trading. You got to make sure that you got, that high upside and low downside, and we are in that position right now today. So, just a heads up there. So drilling in a little bit more, I have not touched these charts at all today. So I kind of left my levels from this morning just so we could do this. We had this overnight low there. It did penetrate, came back up, played around a little bit, and then we got that big flush, and it was awesome. I think that's probably what, both you and Flippin' Ticks both hit there, was probably that little flush down. Great ride, good run down. We took out 1, 2, 3 different levels, 3 different key long-term levels. So what we'll do, we'll take these out. An alert on the 1. And we'll just add something right there at the bottom, because that's going to be my stop on my long-term. And it's also going to be a very interesting spot for tomorrow, because if we flush that again tomorrow, there's a good chance that we get another nice little flush like that down. We got a lot of room to run down to this 58.45. That's a ton of space. a little level right here that we need to be cautious about, so we'll mark it up. So 58.79. So if we flush through, I think you got a fairly safe trade down into that area. So something to be aware of. Lots of room to run there. So good opportunity there, definitely, if that happens. Now, probably what's more realistic is going to be this here. We have this tail on top here around 2 o'clock that happened today.
Mm-hmm.
Market in green because we want to go long if this breaks. So 59.95. You also notice, see these little tails down here? It was a breakdown area. So we're re-entering, basically. So a lot of times, your support will become resistance. Resistance becomes support. You'll hear that a lot in, the trading lingo. And that's really what happened right there. That's why it came up to this 59.95, hit it, and then it sold off. And now we're starting to creep back up towards that again. If we penetrate that level again for the second time, there's a good chance that we start to run a little bit, and we'll at least get to this overnight high here that I have marked. It's 6,016. So I couldn't see it there for a second. So let's remark it. So make that a green level too. So that would probably be the area that I'll be looking for, somewhere around there between 1610, because there's another little top there on the 2 hour, and then the 1616. So those would be the two target areas I think I would be looking for.
And that's the area where we really got the breakdown this morning. That's where it rejected.
Yeah.
And flushed.
Yep, you can see it flushed, and then we came back up. We retested it, which is great. And then boom, that's when we start doing the down stuff. So if we reclaim that level, some people might call that a confirmation of the false breakdown that we had. We're well above that old low anyway. I think we've pretty much already confirmed it, but it could still flush back down. You never know what could happen with the news. So what platform are you guys using? So this is TradingView that I'm on right now. But we trade live both, I think, from NinjaTrader now. I flipped over. You're still on NinjaTrader, right, Adrian?
Yes, I'm on. I use both. Well, I use NinjaTrader and TradingView. I'm kind of like you. I use NinjaTrader really for my trades. But I typically do my setups on TradingView. Sure.
So personal or prop? So I've done both. I was prop for 3 or 4 years. I built up enough in my account that I went personal. So that's kind of where I'm at right now at this point. But we do have some experience with some of the prop firms. And I think that's probably a topic that we'll talk about here in the next week or so. I think that'll probably be a good one of trying to decide how you're going to get funded and stuff like that. Where's your capital going to come from would probably be a decent topic to run by people. So.
And I do a prop firm. I don't know if I want to say which one at the moment. But I mean, I will.
To be announced later.
I don't want to sound like I'm promoting, a prop firm.
Yep.
But because I've used a couple of them. But I'm using Apex. So Apex Trader is what I trade off of now.
Excellent. So I guess one more interesting level here that I'm seeing, if we wanted to get aggressive on a short, which I don't really want to, but if you wanted to, you could look at this 59, 49, 50 area. If that falls, you probably get a nice little easy 20-point flush down into that bottom. It'll probably double bottom basically and retest there. It would be my guess of what could happen at that point. So keep that one in mind. Probably not something that I'll play, but I will mark it on the chart for today. So any comments, questions? All right.
Okay.
Anything else you want to hear about ES, Adrian?
No, I think ES is definitely setting up. I mean, just like today was a great day. I think tomorrow or even overnight is going to show us who's going to be winning this battle. We've kind of had some down days for a couple of days. I think that Have we exhausted that? I'm not sure, and longs are going to start to overtake. I think that we'll have a clear picture of that overnight and how these levels hold.
Totally agree. Yeah, I think if we chop around tonight and don't resell off, that's probably a decent sign. We're seeing it hold a little bit. I had the RSI here at the bottom. We can see it sort of creeping up. We actually have a divergence there. So you can see the strength is getting a little bit stronger actually as we're going. So, time will tell, but I think we've set it up for maybe a decent long. Nothing's guaranteed, that's for sure, but the risk reward is very nice there. So let's take a look at CL today. Let's see what we got. All right, let's zoom her out a little bit. So we're still in that big consolidation that we talked about yesterday, but we did have a key break, not really key break, but we broke some bigger levels here. Oops. Broke it, flushed a little bit, and then we literally just sat still for almost the entire afternoon. The big move happened. We'll flip it up on here, a little shorter term so people can see. We had the big move that happened early in the day. By 10 o'clock, it was pretty much dead on the vine after that. I mean, literally just sat there and chopped around. Didn't need more. Just to show folks. Right, look at that. We have overlapping. Lots of overlapping candles there that are happening. It's sort of breaking out of that little bottom consolidation, but there's no authority to that breakout at all. I wouldn't be surprised if tonight we kind of rock around in there a little bit more. Time shall tell that. So let's look at the actual levels we'll play. We'll go to the 120-minute chart to start. So we're going to mark this one for kind of a reclaim, retest type deal here. So we'll mark it purple. So what I'm looking for there is maybe this will drive back up tonight, hit the 69.30-ish area, maybe go up above it, maybe it gets 69.50 and then reject back below. I would call that a retest then at that point. The bears then at that point, they've sort of reloaded themselves. They could push it down again one more time, very likely at that point. So if they do push it back down, then we will be looking for this area here, 68.68. That's a odd one. We have a little double bottom here. We got two tails there at that spot. So there's been buyers there that have came in. So people are long at that area. So like I said yesterday, I like to be getting in when people are wrong. So when it flushes below that area, that's when people are wrong. So if we test this, come back down, that's a prime time trade. I'll definitely be looking for that one tomorrow.
I love double bottoms.
68.42. Heck yeah, yep. Especially a breakdown of them. 68.42. That's an old low from way back in December. We'll probably get a little bit of bounce there, so it's going to get a little choppy there. Wouldn't be shocked we break down, hit it, come back up, test that again, come back down. Maybe flush down a little bit more into maybe 68 area, something like that. I think that could be realistic if that's the direction that we decide to go in. Let's look at 30 minutes just to make sure we're not missing anything. I doubt it since it didn't do too much. Yeah, I don't really see anything that I love there with that. We have our levels from yesterday. That 70 that I debated on live actually ended up being a great trade if you took that short there. I personally did not.
You didn't take it?
Unfortunately, it didn't hit my rules where it has to break. I didn't take it, because I had that rule. It has to break twice. It only broke one time and just flushed all the way through. So yeah, that's the way it goes.
I mean, because and this is where people will learn, right? Different stroke, different folks. And this is why it's important to have your rules. So I'm one of those that if it keeps rejecting and it breaks, if it's rejected multiple times and then it breaks that area, sometimes I'll take that breakout trade, especially depending on if I'm seeing that the shorts are taking over, the longs. So I'll take that breakout
Yep.
trade. And typically what I personally do is when I do those types of trades, my stops are shorter. So it's really not that big of a risk. Those trades for me are usually like 3-1, 4-1. So I'm not mad at it if I was to lose. But when you win, oh man, they're great. So that's how I look at those. But I know you like to have the area retested. If it breaks and it's breaking hard, I'm taking it.
I brought over my so I brought over my 1 minute chart just so you could see, like, it went boom, we hit. We did come back. We did a little tiny test of it, but I didn't get my 5 candles in between, so that's why I didn't take it. That's my little hitch in my rule. I mean, I miss a trade here and there, but that keeps me safe more than that it costs me money. So I've tested that thoroughly over time. I even sometimes do a trade where I'll buy this bottom of these zones and I'll let it come back up to the top, on the first test.
Mm-hmm.
It just depends, in the consolidation areas, that's a trade I really like, but we can kind of cross that bridge later when we go through like specific strategies that we look at. But just this is my example, it just came right through too fast for me. I missed it. That's life.
See, and that's the thing with the different time frames. On the 30-minute, it didn't look that fast to me.
There you go. Yep. But it was.
And that's why it's so hard for me, because I know I wouldn't have taken it. There was absolutely no way, because it would have been moving way too fast. And my mind is just like, I can't get it. On the 30-minute, it doesn't look as fast. I'm looking, and it won't.
Not only that, like, look at this. If you go back up, like, look how much we moved, like how much work the market did there. We did 70, 80 ticks in a matter of 20 minutes.
20 minutes? Yeah.
Yeah, at most. You know what I mean? That's a lot of work for a consolidating market like the CL to put in that fast. So that was another reason I was really, really cautious on that level. You're not always going to be right on everything. So,
I mean, I was literally out of that trade. I don't even know if I was in it 2 minutes. It was, yeah, I was in and out of it. And I mean, it hit my targets, all of them. And it's like, what happened? I was like, oh, I should have been watching this a little bit harder. I was looking at other markets, but yeah, it was still a great trade.
Yeah. Trade. Yep. Yeah. For those that hit, man, good for you. Great work. You're not going to catch them all. Some options then throughout the day. If you miss something, you're not brokenhearted about it. You just move on to the next thing. Hope something else sets up for you throughout the day, and it obviously did. So we're good. We're all right. Good. So let's whoops. Any additional questions on CL today?
No. I mean, other than that, the overnight moves and then that move, that was pretty much.
Was it? It was dead. It did all its work in like 20 minutes. It did it all. It was like nobody else wanted to trade it then the rest of the day. So we just sat there in perpetuary crap, chopping around.
Yeah.
All right. So let's move on to our final product here. The gold. This was an interesting one today. So we talked about these key areas yesterday. We had our all-time high. Adrian and I were both looking for this to break to the upside, considering the longer-term trend has been up. I was sort of hoping that would be the trade that we got for the day, but the market gods didn't bless us with that today. So instead we got the down move. Let's zoom it in a little here. Let's see it a little closer. Put the right one up. There we go. So we're on the 30-minute chart here. So this was a level that I marked this morning because I wanted to get aggressive on it, and I actually got caught on this. I'm not gonna lie to you, I got caught. So It went up. We got the fake breakout on it, and then it started to flush. But I did flip it right away, and then I had a really nice winner down to this 29.30 area. So when I came in this morning, I saw 1, 2, 3. There was like 4 tops that all had happened there. throughout the overnight session. I was like, well, that's definitely a key area and something to watch. So I marked it. We did try to break it out. Get my other 1 minute so we can see exactly how it happened.
And then we definitely had that clear breaker structure down. So once
that
one. So that's where I got in. But that was once again just kind of the same trade as the oil trade. I took the flush of the straight break of the structure area, and like I said, that's one of my strategies. Now I know a lot, like we talked about,
yep.
People have different strategies when it comes to this, but that's one of mine. When it's coming hard and it flush and it breaks structure, I'm game.
Yep.
But once again, I make my stops super tight, and it's usually a 3-to-1 trade. So I'm usually, whether I lose it, it's usually not going to make or break me of the day. But if I hit, sometimes I can go home from there. I can pack up and go to the golf course or something.
Those are the best days, man. Call it quits nice and early. You're done. So for me, this is how I approached this one. We had our first break there. A couple minutes in between, we had a second break. I didn't take this one. We came back down, and this is actually where I entered right here. It was on this candle. It started to go my direction. I was feeling good about it. But then unfortunately we just flushed all the way down and took my stop out right around here. I saw that it tried to go push up again. But when this failed right here, that's where I got short. And then I got short all the way down into that level there. So, it's important in trading. You have a bias, you decide what you want to do, but you're not married to that bias. Be quick to flip it. If you see something that's going different from what you expected, don't be afraid to go in the opposite direction, especially day trading. Don't be afraid to go in that opposite direction with it. And that's what I did here. And that was one of my big winners of the day. Honestly, it was a big win. So let's just mark a couple levels up. Tomorrow, I want to go back to my 120 minute. Clean her up a little bit. So we see we're coming up. What are we doing? We're retesting that old area that we broke down from. So it's going to be key tonight to see what it does. I think probably the most likely thing that's going to happen, we'll probably reject a little bit here, come down. If we can make a little bit of a higher low, and then come back up above this level. So let's mark it green. So we come down, we make that little higher low, and then come back up through. That's a pretty good sign that the bulls have taken back control. It's all like that level at that point. Go up to that tail that I got stopped out on. So I'll probably look for something around that zone if we start to head back up. Gold's an interesting one. I like to trade it at night, and I like to trade it early in the day. But if you get it after like 1 p.m. to 6 p.m., don't touch it. Honestly, it's just
I hate it.
Usually, yeah,
I can't tell anything.
Good. Yep. Yeah, you get a lot of chop. Once the European markets close, it seems to just shut down shop for those few hours. So that's going to be something you want to see early in the morning. I don't think we'll have the opportunity for it to come down and back up, at least while I'm awake. That could happen maybe on the European Open around 3 a.m. I could see maybe something like that happening. But we'll play it by ear. So maybe we'll look out and it'll come down, chop around a little bit. And then tomorrow morning, right away, we'll see that break. And then that would be the time that I would take that trade.
So, yeah, I'm with you. Typically 11:30. I rarely trade. Like, there has to be some kind of news-driven cycle for me to trade gold past 11:30 a.m.
Absolutely. Yeah. Especially gold. Yeah. And really, honestly,
oil too.
Yeah. All products. I mean, I don't like any product between 11:30 and like 2. I'll trade the ES a little bit after 2, like between 2 and 4-ish. You get some good volume that comes in, some good action sometimes. There's a nice closing trade that I do sometimes on it. But overall, the heat of your day as a day trader is going to be between 9 and 11:30. After that, it gets a little bit choppy. My levels are stale by that point. They've been traded through and stuff. I don't usually do a reset until later at night. If my level's already played, I don't usually play it too many. I don't try to go like over and over on it. I don't get too greedy. If it hits, then I'm happy, and I celebrate that I was right on that, and I just keep it moving then from there. So probably on the bear side, we're obviously going to be looking at the low from today. If we come back down, flush through there, retest, something like that, we could drift down to this big, huge tail from February 12th. I could definitely see that happening. We get through there, then, we got another little level down here at 2876 that may be of interest. But, we got a nice move on it. We're still in a big consolidation. You know what I mean? Like if you go back and you look here from this top to down between there. So probably don't want to get too excited on that downside until that 2886 breaks. I think I brought that level up yesterday. I did. Yeah, okay. So that's where it may get interesting on the daily, but still, never forget, we are in a huge uptrend on gold. So just be cautious, super cautious on the short side. Any questions about gold?
No, I think that's good.
Pretty easy. I think we got some pretty decent plans here, for the time being. I'll come in tomorrow morning, I'll reassess, see what happened overnight. I think overnight tonight is going to be pretty key. Like Adrian mentioned a little bit earlier, we'll see what happens. Some of these products, we'll let them shake out a little bit. They all had pretty substantial moves. So, there's a lot of stuff to digest for the markets. So we'll hopefully let that happen overnight, and maybe we'll get something good tomorrow on these.
Oh, yeah. Yeah, I'm excited. I want to see where the market goes. It tells a story. I feel like we're kind of some nerds here. People like get excited about the market. Like, yeah, I love this.
Absolutely,
stuff. Yes. This is life. I have it on my phone. I have to stop. I need to take the app off my phone, honestly, because it's just to look. I'm always looking to see like, oh, what happened. Even though I'm going to look in a couple hours and reassess the market and set my levels, I still have to do it. Like I'm at the gym. This is how horrible it is. I'm at the gym and I'm like, what's the market doing? Let me see. Oh, man. And you playing with yourself because I don't know if you do this, but I do. I'm like, oh, man, like my story played out perfectly, because there's still typically more trades that you possibly can make. And sometimes, you don't take them all, right? And so you're like, oh, and it'd be a big swing trade, big winner. And you're just like, man, maybe I should have stayed for like another 20 minutes and took that trade. But
I will say I do try to take them all during my set trading hours, like in the mornings, from that 9 to 11:30. I try hard to take because you don't know which ones are going to win and which ones are going to lose. You know what I mean? So you got to have, if you got that good risk reward. I know there's edge there. So I almost feel like I have to take all those during the daytime,
You do so, and that's one thing I don't like. Remember when we was talking, and I was in the short, which ultimately fell to the bottom. But I was like, oh wow, like I still have a piece of this trade, but right here is where I would have went long, which would have been like 7 points, right? 7-8 points. I think it bounced up before it ultimately fell again. But I'm like, I'm not gonna sell, get out, and take this long when I'm already up big for the day. Even though it's a great trade, it met everything that I wanted to do. But that's another thing that I don't do. Some people will. They'll trade it, get that long, and then get back short.
Yep.
Me, I'm like, I got the fat belly today. I'm not. That's it, man.
Well, sometimes your nerves are shot by that point too. You're just not feeling that confidence to re-enter. I've definitely experienced a lot of that. So I understand, where you're coming from on that stuff. And you've made your money for the day. You're feeling good. You're like, why risk it? Why risk feeling bad now at this point? So, there's definitely something to be said about that. But personally, during those main trading hours, I really do try to take all my setups just to, just to keep the risk reward there and to keep moving. I know a good fraction of those are going to hit. So I want to be there when the volume's there, when people are interested in the markets. Things are moving. These levels when we're playing them, these are breakout trades. We have to have volume behind it for these things to work.
Right.
So that's why those time frames are usually really good to do it in.
And see, guys, everybody that's still paying attention here, this is where me and Jordan differ. Jordan, on average, how many trades do you typically take a day?
5 to 10.
If I take 5 trades, that's because I've been losing.
That's the difference between a 1-minute chart and a 30.
That means I have to see some trades through, because clearly my first sets, my first 2 trades didn't work. So
Yep.
Yeah.
Yep. Absolutely. We definitely differ in that area, but we still use the same basic techniques. And I think most successful traders use something similar to this that have been doing it long term. So at least from my experience that I've seen.
Okay. All right. So, hopefully you guys are enjoying this information. We'll keep it coming, and we'll start, day by day. So this is something we're going to be doing every day. So we'll dig in deeper, especially touching some of the topics that I know people have been hitting me up, hitting Jordan up, that they want us to talk about.
Yep.
Trust me, we're going to get to it. Make sure that you guys like and subscribe, so that way y'all can be notified when we're going live and be able to go back and watch the videos. And you can always, shoot us a comment and we'll see it, and we'll make sure to add those things too.
Any suggestions at all, let us know. If you want us to start breaking down some individual stocks, I'm perfectly fine with doing some charts on those. We'll pull them up raw and we'll go through them and see what we're seeing. You know what I mean? We can do some of that as well if that's of interest to folks. So, just let us know in the comments. Let us, or if you're personal, family, and friends, give us a call. Let us know something along those lines. So we're more than happy. We're here to help people. So whatever way that we can help you in your trading journey, that's our goal here. That's what we want to do. We want to help others. So we've been successful with it. We want others to be successful too. So that's ultimately what we're doing.
All right. Any closing remarks you got?
No, man. On that note, I think we're good for today.
All right. Thank you guys for showing up again.
Absolutely. Till tomorrow.